Thanks so much, Yaside. This is, I think, a really great moment of collaboration between Aiba and Ada, and I'm really pleased and privileged to be facilitating this panel today. So, the name of the panel today is first of all, let me maybe introduce myself. So, Nana Coleman, I am the Impact and Membership Committee Chair for Aiba, and really, what that's focused on is supporting our members in their professional development. Particularly as we think about our members that are more experienced, what are the opportunities they want to pursue in their careers? What are the experiences they want to gain? What are the networks they want to gain access to? And so this is a great opportunity for many folks amongst our membership today. So the name of our panel today, Going Global, we're really looking at folks that have maybe started their career somewhere else, but have returned back to the continent, either to a market that they are originally from, or have pursued some other opportunity where they found an opportunity to excel. And so, really, just want to talk about what that experience was like, what that process is like, what our panelists have learned from that experience, and get those insights for everyone on the call today. And so, I will briefly introduce our panelists. We have Anthony Muturi, we have Bel Ulega, we have Mulenga Mutati, and Rosetta Ayete. And so, first off, I would like for each of you to maybe give us a little bit about who you are, where you are based, maybe where you qualified, and then we'll kind of get into the questions today. So I will start with Rosetta, since I see you first on my screen.
Hi, good evening, everyone. Good afternoon, everyone. So my name is Rosetta. I qualified in the UK, worked in insurance and consultancy, currently based in Nigeria, where I moved to in 2022. Did I miss anything?
I think that's good for now. We'll get into the meat of these things a little bit later.
All right.
Next, I see Anthony.
Okay. Good afternoon, everyone. I'm making the assumption that you're in the US. Anthony Muturi, Group Actuary at ICA Lion. That's the equivalent of the Chief Actuary. Qualified in the US, spent a lot of time in the US, and then transitioned into Nairobi, Kenya. Born and raised in Kenya, lots of time in the US as an actuary, and glad to be part of the panel.
Fantastic. Thank you, Anthony. I see Mulenga next.
Hi, good afternoon and good evening, everyone. So, name is Mlenga Mtati.
Okay.
Can you hear me?
Yeah, we can hear you now. Yep.
Okay. Mlenga Mtati, Group CEO and Chief Actuary of Greylegs, qualified in the UK, and then moved back to Zambia, where I started Greylegs.
Fantastic. And then Bell.
Thanks, Nana. My name is Bel Wolega. I qualify in the US, moved back to Cameroon, where I work for an insurance company. I'm a chief actuary for this Pan-African company in Cameroon. Thanks.
Awesome. Thanks so much. And for everyone on the call, just so you're aware, I know we started a little bit late. And so for those who can stay on, we'll go till about 1:30 p.m. Eastern if you're able to stay on. I know for those on West Africa time, that would be like 7:30 p.m. I'm not going to get into all the time zones because I'm sure we have like 7 of them on the call. But so we'll go about 70 minutes from here for those who are able to stay on. So the first thing that I want to kind of ask and get into is just your awareness of an opportunity to move back to Africa, to the respective countries that you moved to, and to take on that opportunity. How did you originally become aware of that opportunity after either working in the U.S. or it sounds like the U.S. and the U.K. are the two countries that we have? How did you become aware of an opportunity to move back to do actuarial work? Let me start with Rosetta.
No, thank you. So actually, I went to Ghana for an extended stay, first time in a long time, and I just sort of liked the lifestyle. So that's how it started. So I went to onto LinkedIn of all places, and I started arranging coffee meetings. And so eventually, I got an invite to someone who was working. I really wanted to just. I'm Ghanaian, by the way, so I wanted to find out what the actuarial work was like. So just literally went knocking on doors, cold calling kind of thing, invites in on LinkedIn. And I had a couple of people agree to meet. So I met a couple of them, and one of them happened to be a regulator, so linked me up with a few people. Anyway, long story short, there was an opportunity coming up in Nigeria, so they first pitched it to me. I think the very first job that got me interested, I didn't eventually go for it. So I went back to the UK and I was working there when Yvonne Powell reached out to me because actually I had been linked to Yvonne when the first prospect in Nigeria came up. And it was really like, oh, I know somebody who is an actuary in Nigeria, speak to her, find out what the environment is like. So that was how we connected. And so even though the first opportunity didn't work out, when another came, Yvonne reached out to me and, the rest is history. That's how I ended up in Nigeria.
Fantastic. We'll go to Bell next.
Yes, thanks, Nana. Mine was very simple. It was through social media. Actually, friends of mine in the US heard about this opportunity in Cameroon. It was during the COVID time, and I was already in Cameroon. So they told me, if you want to stay in Cameroon, hey, here is an opportunity. And, I sent my resume and, it just went fine. That was it.
Okay. Anthony.
Yeah, so mine is less dramatic, but nonetheless, what happened is that the organization I was working in the US started thinking about Africa. And they were thinking about it, from the English-speaking Africa, thought about Ghana, South Africa, and Kenya. And one of the things as they were thinking about this is through partnerships, and what they did within the organization is build people of African descent and created an Africa roundtable. And within the roundtable, brought us different people from the continent who are working within the organization. And then from there, we did what we called a lunch and learns, which is, again, we're showcasing Ghana, Nigeria, Kenya. And we are also explaining to them how to operate in those markets, having come from them. And one of the organizations that they were looking at in Kenya, they were starting to bring in, starting to get into serious discussions. And the value add coming from the US organization is actuarial support. Having been a qualified actuary within the organization, then naturally there was me who had spent enough time there. And part of it is a little bit of networking, some of what you've heard from the other panelists. And for me, got close to the individuals through volunteering within these lunch and learns activities within this Africa Roundtable. And naturally, the conversation kind of materialized into, okay, we have this opportunity. One of the value adds from us is actuarial. Would you consider? And again, that's the beginning of a 6-year journey that I continue to live today.
Fantastic. Thank you. And then Mulenga.
Yeah, thank you. So for me, I think it's a combination of networking and then finally making the jump, if I can call it that. So, I went to university. I told myself I'll do university, I'll work for 5 years and move back home. 5 years became 10, became 15, you started getting comfortable. So I was based in London at the time. So, traveling through Europe was exciting, and you forget the dream. And then COVID came through, COVID hit. And I had the opportunity to spend quite a bit of time at home during that period. So I would work remotely, go back to the UK, come back and work remotely. So during that time, I sort of kept my ear on the ground in terms of networking. I was trying to find out which are the actuarial firms within Zambia, who were the main sort of appointed statutory actuaries. Um, and at the time, there was no local actuarial firm, right? So all the services would come out of South Africa, or they'll come out of Kenya, they'll come out of from UK in some situations. Um, and then, like Rosetta, I also went to network with the regulator just to find out what his view of the future of the profession is. I explained that in UK you actually have actuaries who are appointed to like insurance companies, to pension schemes, etc. Um, and then he just told me, just wait. There's something we're working on in regulation. And then, sure enough, about 2 weeks later, a draft regulation came out for the insurance industry. And then within there, it was every insurance company is required to have an appointed actuary, right? So this basically opened up the market completely. In Zambia, there are about 35 insurance companies, and imagine right now, there are only four of us qualified actuaries living and working within Zambia. So I told myself, you know what, if I don't jump now, it will never happen. So yeah, closed my eyes, jumped and crossed my fingers and hoped for the best. And I'm here 5 years later.
Fantastic, fantastic. So all of you have talked about your various paths to, um, returning back to Africa and taking on roles in the insurance landscape and in the actuarial profession. Can you speak a little bit to what your current roles look like and kind of that scope of the roles that you're in now? So maybe Mulenga, will start with you since we left off and you're kind of your scope is a little bit broader.
Um, yeah, so my scope is okay. So at the COVID, when I moved back initially, so the core of the business is obviously actuarial consulting. So that's where the opportunity presented itself.
Uh-oh, I think he's muted again.
Uh, can you hear me?
We've got you now. Yep.
Yeah, maybe my internet is going in and out, but yeah, I was just saying, yeah, what most traditional actuaries say, like, this is my day to day, wasn't really my day to day. So, starting up a business, I would say the first few months I spent it going around Lusaka looking for office space, figuring out what our logo would be, figuring out the color scheme for the business. So that was my sort of day to day initially, and then putting out proposals to various companies, um, and then also recruiting a team. So year one, the scope was different to year two. My scope in year two was okay, fine. Now we've got clients. I've got a team around the clients. How do I then A, maintain the clients, and then B, field off competition? Right. And then year three, my scope now changed to, okay, now there's competitors in the market. What is the unique selling point that Gradix brings to the clients? Right. So with that, my role sort of shifted from, the typical technical actuarial work to more marketing. How do we stand out from other actuarial firms? Um, and with that, we ended up launching an InsurTech conference, right? Which has worked as is a good marketing event, but also B, it helps leverage the network I gained from, say, the UK and other parts of Africa, and bringing sort of the latest in technology to insurers within the southern region. And through that, we've had I'd say maybe three success stories where a technology provider comes, demos a solution, and then gets connected through an insurer within that particular conference. Um, Year 5 has been broader, so we've been on an expansion journey. We are now in Botswana, Namibia, Tanzania, and Rwanda. So again, my scope is completely on, strategy. How do I grow the business from headquarters in Zambia to sort of a Pan-African or Southern African business? And with that, it's recruiting, right? So if you think about my journey when it started 5 years ago, there were about 3 of us within the office. Now it's like 25 of us within the office. So with my journey, I also have to learn people, right? You go from 3 people who understand the culture of the business to 25 who don't really understand, but you have to, I wouldn't say mold them, but uh, make them buy into the culture of the actual business. It takes a lot of learning, encouraging, training through that period. So, yeah, the scope is very, very wide.
I appreciate that, and we'll come back to this discussion in terms of the expansion of your business in a bit. But next, I'll go to Anthony. How kind of from the point when you returned to now, what did you start off doing, and then how has that evolved in that time?
Yeah. So as Mulenga was speaking, just kind of thinking about my journey, and it's in a similar way, but within a business. So when I arrived, there's 3 PNC companies. There's 2 life companies, and they're being served by 2 individuals. One for the PNC, which we call general insurance on this side of the world, and then one for the life company. So first thing is starting to get up to pace one. Obviously, myself being a Society of Actuary qualified, is to, yeah, life, we okay, we have some good understanding. And then getting into general insurance, then now what do we do? And first is to acclimatize. And it's a discussion that I had with the ownership as to I'm a life actuary. And this other side, yes, it does exist, but nonetheless, it's not anything that I would not get up to speed. And here's where there's a plugin for AEBA where I said, well, I have networks of professionals who are PNC actuaries, and should I see anything that I'm not clear about, I will reach out and I'll try to understand and make due of what it is that I need to understand. The answer I got back was that, yeah, we do understand you're a life actuary, but it's easier for you to read an actuarial report coming even from the general insurance side. So as a result, you're closer to the action than anyone else. So we're okay. And obviously, us professionally, knowing that we can't sign off on everything on something we don't understand. So one then starts thinking about building the team, similar to what Mulenga shared. So you start building the team around first very good individuals that I found within the business, and we still have them today, and then start building capacity within Kenya, and then another level of capacity with the life insurance company and the general insurance company in Uganda and also Tanzania. What was coming and ahead of us was IFRS 17. IFRS 17, so we needed to drive the implementation of IFRS 17. Globally, it's understood that largely actuarial. And for us, we're given the mandate to drive that home. So regulation wanted us compliant by 2023. So first thing is to build a team. Most of the work was being done, actuarial work was being done by consultants. So first things to do is to bring that work into the house. We have better understanding of the business, can move quicker, all those things that obviously you still need the appointed actuary, similar to what was shared. Similar law exists in Kenya around us having an appointed actuary who still kind of checks in on what it is that we are doing and ensuring that the business is sound from what we are doing. So we moved the team from the 2 individuals. We have 2 now. I think as of this week, we added 1 more. So we're talking 24. And within that period of time is to just not even just go through implementation, but then also start getting within the business a lot of appreciation for what actuaries can do. And sometimes we extend beyond our boundaries because we need some things done so that then that comes to us much better. So since then, implementation is past. We're still trying to make people still understand the impact of the implementation and what it is that it means for business. So we're still on that journey, strange enough, 3 years in. A lot of board engagements, engagement with senior leaders, trying to convince them the value that we bring. And hence, I think we've been successful so far, getting the team up to 25, getting into pricing, valuation getting a little bit more solid, value adds coming out of the work we do so that then people can see whether it's looking at direction of the company around products, all right, which products are driving better profitability, value of new business and the like. So there's been a lot of that activity going on and similar to, like I said, almost building business within the business. So we're still on that journey, but I'll stop there.
Fantastic. And that, again, that'll be thinking about kind of that journey, and having more of the business scope beyond the technical work is something we'll revisit shortly. Bell, next to you.
Yes, thanks, Nana. My experience is kind of like similar to Anthony's. The company Activa is a Pan-African company with 7 non-life insurance companies and 3 life insurance companies, plus a reinsurance company. So as a chief actuary, I'm responsible for handling pricing, valuation for life and non-life products. And as you know, Africa is a diverse continent, so there are many languages, many regulations. So some regulation will require us to do IFRS 17, especially in Ghana, for instance. And some other regulation have a local GAAP type of US GAAP. So my department has to understand all the different laws, all the valuation laws for live and non-live products. We basically, have to implement these models into application that we develop in-house. It took me a long time to kind of get to the non-life experience because my US background was in life insurance. So it was a learning curve, to do the chain ladder and Bonheur Ferguson, all those techniques for estimating the IBNR in non-life. I kind of went through it. Also, reinsurance was pretty new to me because in the US, I was involved only in live risk management, modeling, and pricing. So I had to understand the type of reinsurance contracts, the excess of loss treaties, the capacity, and everything. Also, the team, when I joined the company 5 years ago, it was a group of 3 individuals, and now we're a group of 10. One of us just got his ASA 2 days ago. The list came out on Friday of last week, which is great. Yeah, so that's basically it, handling all the actuarial activities for live and non-live, and also most of all, attending board meetings, because this is one thing that I noticed. Not many actuaries have the opportunity to kind of go to the board meetings every quarter in order to kind of explain the impact of the reserves on the bottom line. Yeah, so thanks.
Fantastic. We're getting a lot of good stuff here, that I'm gonna really enjoy coming back to. But we'll round out this question with Rosetta in terms of your sort of evolution when you got to Nigeria from the first role you did to where you're at now.
Yeah, thank you. Quite bits of everybody's one. So I got into Leadway, which is a composite insurer. It has life and general business, and it has health and a subsidiary in Cote d'Ivoire also. But I got in to initially help them with IFRS 17. So I had been working on IFRS 17 from maybe 2021, did a bit as an insurer actually in-house, as in the business, but also maybe 2 years in consultancy. So I've sort of been around a bit. And in my last role, I was one of, let's say, 80 people who were just focused on IFRS 17. So when I got in, they hadn't started, they hadn't even decided on the model to use. and we're going live with everybody. I was like, wait, what's going on here? So it really, the first 2 months was crazy. I was like, you've got to decide which model you're going to be using. I got then involved with with the vendor list. So that was the detail that I got in. And initially, in fact, this company, we actually have execs who are more familiar with actuarial work, and they appreciate it. So that's a very good thing. And I think Leadway actually maybe has one of the bigger teams. So I came to meet a team of about 10 people. They were qualified actuaries in the team, maybe one associate level, one FIA, and different people at different stages, because they get supported with salary increases and that sort of thing. So there's an actual actuarial program here. So it sort of attracts people to the business. So they have that. But they still were quite laid back when it came to IFRS 17. So I come with all the European urgency that was lost. So I think I started off doing the IFRS 17 work by myself, which was crazy. So my background was I did different things, but I was also a Prophet developer, so I could code and do that. So they got that tool, and I ended up being the one person who did that, because we had to get people, training people to even know how to use the software to start the IFRS 17 journey. But the good thing for me, and I will give them kudos in terms of how they work here. So they understood actuarial work from first principles. So they understood the models very well. And that made my life so much easier, because moving from Excel to the model, like they knew what it was. They just were not familiar with the tools that, I was familiar with. So we sort of got through that. But the other challenge was working with the implementation partners, the consultancies. They were learning with you. So sometimes you get used to people who are experts, you don't have that. So you're almost reading, through all of the different interpretations with them, and you're challenging them, and, they're supposed to be helping you. So that was a significant challenge. And I think there's still a learning curve there, but yeah. And then I'm also a life actuary. I thought I heard they'll say, and I was actually quite specialized also in the life space. I had to understand general business, and I think I think CT6 was when I did general business, and I had to understand or the triangles, IBNR, the conversations, risk adjustment, and I think even understanding the different portfolios, because nothing is the same. Then the other challenge that we had was data, in terms of how the data had been kept in the form in which it was. It was a very steep curve, I won't lie. So I did that for maybe 2 years, and then I got an opportunity to move into the business. In the business side, this is the technical team. So in the way the structure is, we do have the actuarial team, they do have a chief actuary. At the time, they didn't, but they do have a chief actuary. But I work in the business side. The business side, I cover things like underwriting, claims, and operations. So the actuarial setup is almost advisory to me and to the business. So one of the things that's quite interesting, especially working with underwriting, for instance, in the way product development, so you end up doing so many different things. So I'm quite involved in product development, which I enjoy. So I do all of that. I'm involved in review of some of the actuarial work in terms of the valuation, because I'm giving insights to the actuarial guys. And I find that I think I can't imagine somebody doing this role who is not an actuary, because I can see the pluses of that I think I bring to that role. But it's been quite different. And maybe the last thing I should say is the exposure, and I'll probably get to it, but I do attend board meetings. Like, we're just getting ready for board in 2 weeks, and that's year-end valuation, where you have to go. And so even though I'm not actuarial, from the business side, you have to then be prepared to go and answer questions that are coming from, the reserves, the impact on the business, and a whole lot. So you definitely cannot be siloed. I think every day is something different.
No, thank you for that, Rosetta. And I will say, like, a theme that has come out with all of you is that you had this sort of specific training, whether it was in the UK, whether it was the US, you worked on particular types of lines, and then you get back and there's all sorts of companies, all sorts of lines. You now have responsibility for, product segments that you've never worked in before. And so one of the questions that I would have is, but also something that was mentioned by a few people was kind of in some of the companies there may not have been as high of an appreciation for actuaries and the capabilities of actuaries within the companies. So I think one of the things I'd be curious to understand, and Rosetta will kind of lead with you, um, is what was that perception of you when you returned? I mean, it sounds like there was some favorability because there was a bit of an actuarial culture, but the perception both when you got back to do that actuarial work on IFRS 17, and then also shifting into the business to kind of lead some of that technical function.
And so, yeah, I think I won't gloss over it. It was quite tricky coming in because you're coming from the UK and you're coming to challenge things, so you have to be quite diplomatic in the way you do things. And there's also something that used to come up. It's like most of the conversation will be in very technical actuarial language, like maybe I don't know, TX, whatever. It's like everything was technical, and I'd say in English, please, in English, like let me get the understanding of it. So it was very different in terms of what they had maybe been exposed to. But like I said, they knew all of it. It just that sometimes there was that. So there was a transition period. So I had to do a lot of, I think, for instance, for me, for IFRS 17, I had to do a lot of training. So I'll do webinars, like maybe weekly webinars, that sort of thing, to get people even comfortable with what I was doing. And then the other part that I thought was slightly different was even the structure of the team. So I was used to having teams. So you have an evaluation team, you have an ALM team, but everybody was doing everything. So it was, again, something that I wasn't familiar with. So it was really maybe getting comfortable with how the system worked. And it was a learning curve for me because I needed to understand that it was a limited resource to what I was used to, and it had to be used efficiently. And what they had was what worked, and I learned very quickly that that worked. So sometimes I think you need to do some kind of adaptation yourself. And so that was something that I had to do. But I think generally, so that was okay. Moving into the business side, I think that was a big shock when they knew the actuary was coming in, because you find the salespeople say, "Oh, the actuary is going to be very strict. Is going to say no to everything." The salespeople were up in arms. And it was quite interesting. But then I come in and I'm looking at everything. I'm like, no, give me the data, give me the analytics. Let's do this from first principles. What are we doing here? Like, what's the end goal? Totally different culture shift. Initially, they were like, what's she going on? Every time she's asking for the claims ratio, she's asking for the trend, give me everything in proportion, claims based, they give you claims figures. And like, what's it? I need context. What's it, what does this mean? Give me the production figure. Let me do the proportion so that I know whether it's a big number, a good number or a bad number. So that kind of culture change, I didn't even realize I was doing it. Somebody said, goodness, you're going on about data. But I think now they really understand what I'm doing, and in terms of, in a weird way, it gives me flexibility because I'm data led. So I know the pool, I know what the risk tolerance, where the tolerance is. So I can move a bit if I need to. And so I think they're now beginning to appreciate that skill set, I suppose. Yeah, that's it.
Gotcha. So it sounds like a significant amount of almost like culture building around some of that technical and database rigor. Um, Anthony, how about yourself? So again, you talked about again multiple countries, life and non-life, and having to make some of those adjustments. When you came into that kind of leadership role, what was the perception that you had to deal with, both from folks that were on your team within the organization, and then more at the executive level as well?
Yeah, thanks for the question. I think some of it has been touched on, and so there's two moves that are taking place at that time. One coming from the US, and one of the questions you will kind of start getting met by is, okay, how did you guys do this in the US? How does it work in the US? And it's for me, it's a it's a much simpler answer. And it's you have to understand people, I think, from where they are. Obviously, there's some level of curiosity and having to learn to navigate. For me, I knew that if I maybe just follow that, this is how they did it in the US, this is how they did it in the US, it's going to quickly turn into this guy still thinks he's in the US. So you almost have to navigate. So, well, they worked with the US. There's some concepts that we worked in the US, but what we'll do is that we'll understand our situation. And if there's anything that kind of correlates or is similar, I'll be glad to share those at some point. Obviously, that's what is running in the back of your mind, but sometimes you might not want to say it. So there's an element of that. There's also the element of yes, Actuarial, like I said, maybe not appreciated that there was only two people, but IFRS 17 helps in the sense that there's this new thing coming, and these people are going to help us figure it out. And for me, luckily, the leadership also changed. I think within the life company, and that individual understood actuaries from a previous role. So there was a deep appreciation of what we did is that we brought in from where the person was before. They saw the organization almost get transformed and start getting more profitable and efficiency around the organization. So I was a benefactor of that goodwill that was placed on us. So we were able to now use some of that goodwill in being able to navigate ourselves through. One of the things I'll say is it's something that I've recently had it, really put in its place in terms of being described properly is that you want to be good at something, you start with one thing. So what we understood is that we show success in one thing. People appreciate that success and then start getting reception. Okay, you did this thing there. Can you help us do this other thing? And you start getting these invites. And sometimes you really have to take bold moves and figure out things pretty quickly. One thing I'll say with us as actuaries, this whole thing of taking exams, figuring out moving from maybe not understanding anything to becoming well, good enough in taking the exam in a matter of maybe 3 to 6 months, also starts playing at work where you ask to figure out something, you can't say no. Actuaries are supposed to figure this out. So you go back and you try to figure it out, do some reading, talk to others. And sometimes you're not doing it alone, you're doing it with a team. And that has also kind of helped do the navigation and start really getting that appreciation from the rest of the business. And now we can stop people from saying, okay, we want some of that. How do we work together? How do we start doing things across the organization that we can help with? Yeah.
Got it. So a few lessons there. I mean, one about kind of being patient and learning, what the environment is, as opposed to, hey, this is what we did back where I worked, and then also kind of just proving things, one at a time, one at a time, one at a time to build that credibility. Really, really, really like those. In the interest of time, I want to shift questions a little bit. Um, so I will start actually with Mulenga. And you mentioned this a little bit in terms of recognizing sort of a gap in the landscape because every company needed an appointed actuary or is required to have an appointed actuary. And so as you look at your career in the UK, now you compare it to your career back in Zambia, broadly, maybe speak a little bit more to um, how this transition has kind of afforded you to do the opportunity to do things that you may not have pursued when you were in the UK.
Uh, cool. Yeah, that's a good question, Anna. So So like I mentioned, the core of our business is actuarial consulting, right? Qualified actuary, spent about 15 years in the UK, worked for AIG, KPMG, PwC. Then when I jumped back into Zambia and started Greylegs, cool, very fair enough, the opportunity was in actuarial. But I feel in terms of exercising sort of my entrepreneurship side of me, Zambia, definitely Africa has given me more opportunities on that. So started as an actual business. We've opened up a technologies arm of the business, so software development. That opportunity came from working with my clients within the insurance and the pension space. A lot of my clients still use Excel, right? Excel is your go-to person, but now there are more efficient and quicker ways to do processes to calculate things. For example, if you think of a pension scheme, they've got loads of assets. Some pension schemes still store those assets within Excel. My team has gone away and built an investment management system that can help them, have a one-stop shop to see those particular assets. And then take that maybe 2 years later, we've now opened up sort of a capital arm of the business. So it's investment and deal advisory. So doing financial due diligence, capital raising, etc. So I said so from the core experience as an actuary, but now I think what being back home has afforded me is to exercise my entrepreneurship ability a bit more. I have a board that I report to, but working within the confines of being in the UK, a lot of rules, red tape. You have to get 10, 15 layers of approval before you try something, right? As it stands, and what I encourage my team is if you've got a good idea, let's go for it. I'll support it. And I found that has helped us grow quite quickly and quite exponentially because I'd say we dare to dream. So when I think about my career now compared to when I was in the UK, I think to get at the same sort of point I am now, back there, it would have probably taken me another 15 to 20 years, to be honest. Because my stakeholders now is, CEOs of large institutions, regulators, ministers, government officials. In London, there's no way I'm meeting Keir Starmer. So, for example, there's no way I'm meeting the what you call it, the Bank of England governor. That's unlikely going to happen. But where I am right now, that's where my career has taken me. Like these are people that I can interact with quite easily. So it would have taken me about 15 to 20 years to get there. Um, Another thing that I've noticed is, you know, there tends to be a glass ceiling, and every time I go back to the UK, right? So last time I went back in October, and there was a whole, Black History Month, etc. In Zambia, I completely forgot that that exists, right? So within the African continent, the focus is just on, excelling and thinking about your career, thinking about work, etc. There's nothing else out there that is sort of, bringing you down for one reason or another. You're just concentrating on doing the best within your business. So yeah, I think I'll leave it there.
Really, really like that perspective in terms of being able to reposition yourself and in an environment that allows you to accelerate because of the opportunities that are available and the gaps that exist in the market. Um, in the interest of time, I'm going to kind of ask one more round robin question. And so all of you are in different markets, and you're in relatively broad, expansive roles. What's a trend in the markets that you're seeing in that you believe that actuaries that might be returning from abroad, whether it's a trend in work culture or in the actual economic or insurance landscape, that you believe that actuaries returning from abroad will be well positioned to be able to take advantage of. And then we will move to the open Q&A, and I'll be reading questions from the chat. But I'll let you all chew on that a little bit, and we can maybe start with Bell when you have when you're ready.
Thanks, Nana. I think actuaries are welcome in the continent. There's a shortage of actuaries in the continent, as we can imagine. Actuaries are needed in life insurance, non-life insurance, pensions. Like I tell you a story, for instance, like 3 years ago when my company created Activa Reinsurance is basically the reinsurance company by Activa. The company is licensed in Mauritius. And in order to get the license in Mauritius, the regulators wanted to make sure that there's one actuary enrolled with the company. And that was a good timing because I was in the company when they had a vision to create this reinsurance company. I was involved in preparing the documentation that was required by the regulators. And eventually, because of my FSA and me being in Cameroon, it was much easier for the company to obtain the license. So imagine how many other companies cannot be created just because they don't have the required person, the required documentation. Maybe they have the capital, but they don't have the people in order to get the license. So I'm absolutely certain that the actuaries are well needed in the company. In my company right now, we're looking for actuaries in Angola. We're also looking for actuaries in Ghana. So there are opportunities there. Thanks.
Fantastic. We'll go to Mulenga next.
Okay, so for us, I think so just thinking about the markets that we operate in. So like I mentioned, in Zambia, there was a new law that was passed that, every licensed insurer should have an appointed actuary. And I think since then, I'm also the president of the Actuarial Society of Zambia. So there's been more visibility on actuaries and our skill set. I think the market now really appreciates what we can do within the insurance, the pensions, and the banking sectors. I think, before I moved back, most institutions would just put job ads for or looking for an analyst, broad. But now they're actually specifically looking for actuarial analysts. So this gives opportunity for the students that are coming out of the universities to actually target institutions to actually go and work in. Like I mentioned, in Zambia, there was no local actuarial consulting firm before we came in and set up. And in the markets that we've now gone and set up in, the story is the same, right? So, for example, in Botswana, it's a situation where, South African actuarial firms service that market. Namibia is serviced by South African actuarial firms. So within these neighboring countries, the demand is there. I would say the supply is not really there, or the supply is not appreciated because maybe the visibility of the actual skill set isn't really well known. Because if I think about it, there's quite a lot of brain drain when you think about actual, right? I think all of us on this call have contributed to brain drain. But we got back to our senses and said, no, let's go back and fill the gap. So the opportunities are there, and I'm sure you can see everyone on this call, wherever they are sat, they've come back and they're successful, driving the actual professions in their respective countries, in their respective industries. But we need more people coming in, making the jump, taking the opportunity, nurturing the talent that's coming through the universities, because I think they're the ones that worry a lot about whether they'll have a place to be once they graduate. So I'll leave it there.
Fantastic. Thanks so much. Anthony, we'll go to you next.
Okay. So the way I'll answer that, Nana, is to start with something that was recently came in as within our team where we're going through a master class on product development. And the person running the class said that one of the things that we have a problem with within our continent is capital. Everywhere else is everybody's thinking capital is going to be working elsewhere and not in our space. And if you look at what maybe myself and why that organization was looking at the continent, nowhere else the population is growing. Obviously, other spaces population is growing through migration, but in Africa it's organic growth. And when you think for ourselves, where there's activity, then people are going to be buying things, they're going to be insuring those things. Life's going to need to be insured for a long period of time. The population is extremely young. So if you're looking to to set up a company, then you're thinking this is a place to be. Obviously, one advantage we have is that we are from here. And things that will shake others very quickly are not going to shake us because we understand the space. So what you're gonna see over the next few years, and something that I've seen over the few years that I've been here, is that yeah, the globals are looking at the continent, and as such, there's gonna be that need for them to come in and to start maybe swooping up any inefficiencies that you'll find. Another thing that I learned coming in, which has kind of been true, is that on the continent, and you compare that to the rest of the world, this is where you have the largest margins for anything. Something that might be high end but looks the same is going to be charged the same price as the high end in the Western world. So margins are there. They'll come chasing for them. And as a result, there's going to be need for actuaries, and you're thinking about a lot of things moving into digital. As much as we might think, the continent is extremely moving very fast with a young population, so that's going to come in. Mulenga pointed to something on brain drain. One of the things I've noticed is that we, even in Kenya, lose a lot of our actuaries to other markets, and 17 did a number on us. And partly is because of what happened within COVID, where I think people took less exams. So then now you started having a situation where people were not qualifying as fast. And as a result, now they come chasing and they got the money, and we probably can't compete. But for me, I've seen that as being okay. So it's going to be this revolving door kind of thing, where they will go out and they will come back. And for me, it's also enriching the African actuary, wherever they might be. So as we're moving in, others are moving out, and I think we're just kind of doing the cross-pollination. And for me, at the end of the day, kind of encouraged by that, we're going to have richer actuaries at the end of the day. And maybe Mulenga, we end up seeing the Bank of England governor at some point without asking. Yeah.
Love it, love it. And then Rosetta, finally to you to kind of close us out on unprepared questions.
Yes, no, thank you. So in Nigeria, we just had, I think in August, September, we passed the NIRA Act, which is an insurance act, and it's supposed to be changing quite a few things. And the current regulator, and some of the EXCO that are there, I think they're trying to grow the insurance in terms of the technical side of things. So in my company, we play quite heavily in the annuity space. And I would say that in terms of trends coming up, we are starting to see the request for more qualified actuaries. So I'll give you an example for annuity, where people, in my opinion, can be quite reckless in the name of competition, where they are pricing. And you ask yourself, we're using the same yield curves in this market. What are they doing? And we've had some few companies being banned. So now the regulator comes in and says, well, I want you to, submit your quarterly reports, and it has to be signed off by an actuary, that sort of thing. So now people are are asking, and if not, you have to use an external actuary and you have to pay for that. So people are now having to think twice about that. So for that, and maybe I'll maybe speak to the ask. We tend to have a lot of actuaries who traditionally we're doing a lot of valuation work. So we don't have a lot of technical expertise in ALM modeling. So that's something that I personally, I'm struggling with having that kind of specialized actuary. So if you definitely are playing in the capital modeling space, it's definitely in Nigeria. I think that you will be in demand. There's definitely demand for that kind of expertise. Then I go to the conversation around maybe generally on the PNC side. So we tend to do a lot of maybe more of special risks, so big ticket items. So if you work in general business and you have specialization there, that's again something to look at. And then maybe retail. So in Nigeria, where I'm based, the retail market, you think the population size, the biggest in Africa, but retail is almost non-existent. But there is been a conscious push by the regulator to do that because they're saying that, if they're talking about insurance penetration, if they don't crack the retail market, they haven't done much. So there's a special emphasis on that. Part of the new things maybe that NIRA is also bringing is risk-based capital. So we haven't had the final document out yet, but it's making people think about the businesses that they're getting involved in. And again, these are areas that the actuary will come to play, even in advising companies in terms of where to play, because you will have to bring the capital if you want to play in that space. So there's a lot of change coming in, and I think the opportunities for people coming in. Also, maybe I'll just touch briefly on brain drain. It is a thing here, and it's unfortunate. So we definitely are struggling for people who are experienced. So you almost feel like you train people and then they go. And so you then have to deal with a lot of new people coming in, and it gives it's part of what we do. But in terms of work, it can be quite demanding because it's happening. It's a revolving door. So, specialization, we do have some areas, and then of course, look out for the changing requirements that are coming in. So I think the future is bright for actuaries. They're starting to see the benefits that actuarial work is coming in, even in the business side. So actuaries used to do valuation because it was a report that you sent to the regulator. Now you're starting to see it in how it affects your bottom line. And IFRS 17 has contributed a lot to this. I've had salespeople now talking about earned premium, like it wasn't there. It's a big thing. The timing of the earnings is now a thing, and it's now starting to filter through. And it was like, the bottom line, and it wasn't a thing. So in different ways, we are seeing the impact of the actuary. So the business side, once they get it, then I think, and it's starting to happen. It's starting to happen.
Fantastic. Thank you so much. I'm going to move to the Q&A. Forgive me if I'm like squinting a little bit and moving back and forth and maybe paraphrasing some questions, but we'll try to get through as many of them as we can in the next 10 to 12 minutes. So the first one is for you, Rosetta. It's really about, work-life balance when you first got back. So when you first got back, trying to do this intense IFRS 17 modeling and figure out what's going on, what's happening. And then even now, sort of leading this sort of expansive set of technical functions, going from the UK where you might be working 40 to 50 hours a week, has that changed since you've been in Nigeria? How not? How have you managed that?
I can tell you that I was not working 40, 50 hours in the UK. I was pretty chilled. I think there was a joke that, an investment banker and actuary, they actually got the same money as an investment banker with less stress. Honestly, my life was excellent in the UK. I won't lie. But I was actually burnt out. being one of 80 actuaries, I was looking for something clearly because I went looking for a role here. And so it's also work-life balance is maybe you look at it slightly differently in terms of the opportunities and the work that you're doing. I mean, there's fulfillment there. And I really enjoy the work that I do. So I'd say I end up, being involved in a lot of other things. So I'm definitely fulfilled. So there's a balance, yes. So, there are peaks and troughs. When it's reporting season, it's busy. When it's renewal season, for me, it's busy. But then in between, you have to learn to take the break. So it may not be everyday work-life balance, but it tends to be more seasonal. So you tend to sort of take advantage of when the quieter moments, if you like. So I think it's different, but it's not necessarily bad different.
Got it. Got it. I appreciate it. I'm only laughing because when you said I wasn't working 40 to 50 hours, I've seen that life, and I've known many actuaries to to manage to that life. So I can appreciate that. The next question is for Mulenga. And the question is, given the small number of qualified actuaries in Zambia, uh, what are you doing? What strategies and methodologies are you employing to help sort of raise the next generation of actuaries in the country to meet the needs that you've observed in the market and in the Southern African region as a whole?
Okay, yeah, no, thanks for that. So like I said, I'm also the president of the Actuarial Society of Zambia. So, um, I take part in a lot of like mentorship talks. I think that's from the Actuarial Society perspective. But within Grey Lakes, one thing I made sure when I started the business is I'll provide my team and my colleagues the same sort of opportunities I had when I was in the UK. So a lot of institutions don't provide sponsorship for examinations. For us, we said that to be at the core of everything that we do, right? So anyone who's a permanent employee in Grey Lakes, we sponsor them for exams, be it through the South African Association or through the Institute and Faculty of Actuaries. And each year I push them to write exams, right? Some years I say, no, we're too busy. I say, make sure you put it within sort of your study schedule, within your schedule, because at the end, this is what you're working for. This is important. So, from a personal perspective, that's what I've been doing to encourage the growth. But then I think from what Grey Lakes is doing as a group, not just from the actual side, but also the tech side, I think the visibility has also helped in the market, right? So we're at a point where, like I said, being an actuary is now sexy. People are actively recruiting actuaries within Zambia, right? Just because they understand the value that us as actuaries bring. Within the business, I've had situations where people have been poached from my actual firm, right? So that shows that we must be doing something right. Um, so I think that's what I set about to do when I started the business. That's what I set about to do when I ran for president of the Actual Society of Zambia, giving the experiences to those within Zambia that I experienced myself in the UK.
Much appreciated. Much appreciated. Um, the next question is for Bell. So, experience working in Francophone Africa. Um, I don't know that you would necessarily have that um, comparison to Anglophone Africa, Bell, but maybe if you can compare that to your experience even working in the United States, what's been kind of the differences that you've experienced in the Francophone landscape?
Um, One of the differences that I experienced was how kind of like I want to say backwards, but the regulation in the Francophone Africa is not kind of like moving fast. Uh, we're talking all dated mortality tables. We're talking for non-life insurance reserves. We're talking not even the chain ladder. Capital requirements is not at the RBC type of formula yet. So the regulation is not quite up to date, meaning that management recognizes that, and therefore actuaries are needed in order to kind of provide different insights to understanding the business. Whereas in Anglophone Africa, like in Ghana, where Activa is located in, the local gap accounting is IFRS 17. There are discussions about modernizing the capital requirement approach. It used to be the financial condition testing for capital assessment, which is kind of like similar to what goes on in Canada. So right now, the regulator in Ghana is slowly moving to an RBC type of regulation. The other challenge in Francophone Africa is data. It's not easy to kind of get accurate data. So there's going to be a lot of pressing people in business and operation, to create the culture of saving data, making decisions based on data, using data in order to drive the business. So these are, like off my head like that, some of the differences that I kind of encountered when I started in Francophone Africa. Thanks.
Fantastic. Thank you for that, Bell. I'm seeing a question, and I'll throw this to Anthony. What advice would you give young actuarial students in Africa who aspire to build global careers? What are maybe some key skills or mindset shifts that are necessary to position themselves on the international stage? So I guess we're looking now the other way, instead of the world back to Africa, Africa to the world. Yeah, key mindset shifts, skills, things like that.
Okay. Yeah, it's a good question. Like I said, there's movement across. Maybe it wouldn't be any different from maybe what they've had. For me, it's your basic discipline, for sure, right? In what you're doing, have a good understanding of what you're doing, have a good grasp of things around it. One of the things I tend to say is that we are resident insurers. No one else has spent so much time thinking and studying insurance than we have. So having something that they have grabbed onto and can display expertise on will be one. Open mind, just as we coming into the continent have to display and practice, so will be the same. Be ambitious, just try it. I recently came through a quote that spoke to your world expands or shrinks by the level of your courage. So yeah, really reach out, try, and I've seen a lot of people just getting recruited from this side of the world. And for me, yes, strange enough is that the US and maybe even the UK, they all kind of operate through recruiters. And recruiter, if I was a recruiter, yeah, find a few African qualified. Definitely, yeah. It's still the same qualification because we don't have our own, and we're still using the A4s, cars, and the SOAs, so they're globally recognized. And I really encourage it actually, as much as it's a brain drain, because you get to see something different. A little bit of our space, if you're growing up within the actuarial space. There's some things that you don't get to see, and some things that you might be doing that might be, what else should I say? It's almost like swimming upstream. And you going out and into the rest of the world, you kind of release that and learn new things, new environments, so that then we're not thinking that things are always done the way we've seen them to be done. It broadens up the mind, and for me, like I said again, a good thing. And obviously, my belief is that at some point, whether coming in even in retirement and contributing to a growing student force that is then going through the actuarial process, that's a plus. One key thing that was mentioned to me not too long ago is that actuarial is unique. in a way that it is you kind of mature through the profession through apprenticeship, and you cannot really have any other path other than that one. To get good actuaries, there has to be a level of good apprenticeship that follows that. So I was saying, yeah, follow what the heart says, and make it anywhere in the world. Yeah.
Fantastic. Well, I know I wasn't quite able to get to all of the questions, but we appreciate such active engagement in today's conversation. And Belle and Rosetta and Mulenga and Anthony, we really appreciate you taking the time to share your insights, share your experiences, and share some of the wisdom that you have from your experiences in leadership in the various markets that you're in.